What's up, guys? Jeremy Clark here, aka Mr. 66 USA on Twitter, and I'm going to do a video for you on how to identify fair value gap for finding supply and demand zones when you're trading. And I'm doing this for the Crypto Cartel Discord group, and that's hosted by the capo himself at Crypto Luke XRP. You can find him on Twitter. And if you're interested, hit him up to join the group. This one was requested by Metaverse Crypto, and I'm going to dive right in and show you guys how I use fair value gaps. So I'm going to switch over here to the daily, and let's just blow this up a little bit. So what is a fair value gap? You're looking for a 3-candle pattern. Usually looking for, in an uptrend, you're going to look for the swing high, and you want to try to focus on trading the swing highs and the swing lows to give yourself a little more oomph to your trades, a little more likelihood that they play out the way you want them to. So you can see right here, I've got this 3-candle pattern, swing high right here, and what I'm looking for is a point where the third candle, the wick of the third candle, does not quite touch the wick of the first candle. Okay, and so you can see right here, we have this wick, then we have this second candle, and then we have this third wick. So I can see that there is a little gap between those wicks. And I'm just going to draw that out for you. Where's the bottom of that? Okay, so we got this tidy little zone, this little fair value gap here. And the idea is that the big institutions, the big fish, the hedge funds, the big prop firms, whoever, they traded this candle so heavily, and you can see this high volume bar right here. They traded this candle up so heavily that there might be a lot of stop orders in here. There might be a lot of sell orders that didn't get hit, and especially in this fair value gap between the wicks. My take on it too is that in this this ascending candle right here, I kind of think of this as the bigger manipulated market action happening, price action, and then retail keeps trying to go, and it gets sold back down. So the wick to me is where the institutional investors they're already selling into the strength of this candle, and so retail tried to push it up and it got sold back down. Okay, so same thing here. Someone tried to sell this down, whether it's retail or institutional, I don't know, but someone tried to sell this down. It got pushed back up on volume, and so boom, shot all the way through here. Next candle turned red. It's kind of a spinning top here, and we got this wick that got pushed down and got bought back up. So it left this fair value gap right here. So starting on the daily, I'm going to look for that, and I'm going to go in a little tighter now. Let's drop down to the 4-hour, and I'm going to tighten up this zone a bit. And on this level here, you can probably see it a bit better. And let's just bring this in. And I'm going to move this. Let's move this out of the way for a second. Drag that over here. So just to kind of recap, what I'm looking for is a 3-candle pattern. Here's the first candle, second candle, third candle. It kind of makes a swing high right there. And I'm looking for a space between the wicks of the first and the third. I'm going to circle those for you. So looking at this wick right here, and looking at this wick right here. Ooh, that came out kind of weird, but that's okay. So you can see there's a wick right here, the wick right here, and there's a space between it. That's a fair value gap. That's a market imbalance. It got pushed up too high too fast, and we didn't get to trigger any of the sell orders. It's also probable that there's stop orders in here, people that are building their positions, waiting for the price to go up higher. They don't want to get, they don't want the price to drop on them, so they're putting stop orders in here. Anyway, there's an assumption when you have one of these gaps that there is an imbalance and that there are orders hidden away in here, whether institutional or whether the institutions like to go back and hit those later. And I'm just going to close those out. So now we started on the daily. Now I'm on the 4 hour, and you can see that this fair value gap has grown quite a bit. So starting from this first wick, third wick. So in this gap right here, the assumption is that at some point, price is going to want to return. It's going to act as a magnet, and it's going to pull price to it. And as you can see, price came up, tested it right here, came up, and then it came back down. And let's just see what it came back down to. Right there, perfectly. So all these sell orders that were hidden in here, or potentially buy orders that were waiting to trigger at a lower price. You can see we had an up move, then a retracement, and it came into this fair value gap, and it filled. So that's what I'm looking for. Okay, so I'm going to go in a little tighter now. We're on the 4 hour. Let's jump down to the 1 hour and see if I can tighten up this fair value gap anymore. Okay, so that's starting to kind of come together nicely. And again, so let's drag this over. So there's a little tiny wick at the top of this candle right there. You can barely see it. So I'm just using the candle top for now. And then this third candle here, I'm using that as the bottom, and assuming there's a fair value gap in here. And it was confirmed when price came back down and touched this as a demand zone, meaning there is a liquidity in here. So they used this fair value gap liquidity. They found it. Whoever was pushing price grabbed some more shares of Bitcoin and pushed the price a bit higher. Okay, so how do we trade this? So I'm going to go down to the 30-minute, and let's see if we can tighten up this fair value gap anymore. And again, I'm looking for the top of the wick and the bottom of the wick. Just like that. So if I was to trade this on the 30-minute, I would be looking for a few things. One of them being, look at this volume. This volume is telling me that it's going up, 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 and it kind of reaches a high point. This is very unusual high volume. That's usually a hint of a reversal or a reversal to come. So that volume bar there, that large blue candle there, we can see that prices kind of reached a climax here, and then it starts to fade away. So that tells me that this up move is going to fade away. And what's sitting right above are these two daily levels. These are previous fair value gap levels or daily levels that I charted. You can go back. We'll scroll back here and see if we can find them. There they are. So hidden in there are some key levels that were charted all the way back in June 13th that came back into play right around here, around this was on the 19th. So if I was looking to play this, I would find the fair value gap, and I would wait for this to get tested again or to get retested. I'd also notice that the volume had made its kind of climax top pattern here. So I'm looking for a reversal. We get two reversal signs here. We get this double top, tweezer top right at resistance. And this is telling me it's run out of steam. We got this little doji here. Again, this is saying there's not a lot of power to this. There's no volume to this doji. These next two blue bars went up on decreasing volume. You see the volume's going down here, price is going up. That's volume divergence. And again, we got a tweezer top. So we got double top here, double top here. So for now, for the time being, it's not going to go past that point, past this previous supply zone or daily level. And price drops right down, and look at where it drops down to. Right down into the fair value gap. They pick up some more liquidity. They being the big fish or the market makers or the institutions, whoever's buying right here, and buying large, you can see that we have above average volume. And again, on this drop down, above average volume can signal a reversal, which it did. So they picked up liquidity and price reversed. So if I was going to enter this trade, I'd be looking to enter on the bounce on a reversal signal. We have this double bottom, tweezer bottoms right here, digging into this supply zone or demand zone, I should say. And that would be a good spot where you might look for a move higher. So I'm going to dig down into a lower time frame and take a look at this again. And look at this beauty of a doji reversal pattern here. Look at this big red candle on above average volume, and then a doji signaling exhaustion, seller's exhaustion. That move is completed. They pulled liquidity from this previous fair value gap, and that would be my signal to that a reversal is coming. And so I'd start looking for blue candles on volume, which we got 2 in a row. And so I might enter my trade right here. Now this is the 15 minute. Let's go down to the 10 and see what else is there. So again, you can see a little above average volume on this drop, and then this spinning top or spinning bottom. And then you got a bullish engulfing candle that's larger than this final hammer candle here. So again, that's a good spot for a reversal. So I might enter my trade there. I'm going to go down to the 5 minute because I usually trade the 5 minute if I'm scalping. We got a whole mess of reversal signals here. Look at that. I mean, these are all just road signs for what's about to happen. Great big candle drop, great big volume bar. This is the end of the move. Have this kind of neutral candle here, no volume to it. Look at this reversal pin on volume. Another sort of spinning neutral candle. Got a hammer now, and 2 of those dipped into the fair value gap. And then boom, we get this blue candle. Volume's kind of increasing, and price takes off and moves. So I might place my trade, let's see, probably on the break of this right here. So I'd find that support zone. And I would probably enter on this blue candle here, and then you could put your stop loss, depending on your risk tolerance, but somewhere in the neighborhood of here. Obviously, if it dips down, much past this zone right here, you're going to want to get out. But as you can see, it took off, retested, and took off. And what would be the target for where you want to take profit? Well, again, you've got these previous levels. You can see this level from, what did I say, June 13th or 19th, something like that. Back in the day, about a month ago, this level comes into play, acts as resistance, gets tested, and then continues up. I have this line on top marked in blue. For me, that was a more important level. So I usually mark my levels in blue if that's telling me I want to take profit when it gets to this level. And I have a suspicion here. Let's just take a look at the Fibonacci. Okay, cool. So here's the move again, fair value gap, hits resistance, comes back down, pulls some liquidity out of that gap zone, and price takes off and goes higher. And this first level right here happens to be the 0.618 retracement level. So that's a key level that I'm watching. And let's just see how high this went. So we got all the way up here. So we got 22,895 all the way to 24,289. So that was a good solid, that's a good solid move. And then again, you start to get some reversal signals. You got this high volume bar with a falling hammer. And then you have a kind of an evening star and a spinning top. And then boom, look at that big candle coming down. So price drops, kind of respected the blue key level again, respected the black level again, tested it, came all the way back down. Okay, and I have the cam levels marked in here too. So let's just see what the cam pivots would say. Turn those on. So looking at this previous daily move here, you can see that price opened above the central pivot, which is this black line. It even tested R3, which is the red line, which also happens to be the area of liquidity. So the next move that I know that is the most common move when using the cams is going to be R3 to S3. And you can see that's exactly what it did. Came down to S3. And then the move after that is going to go back up to R3. And that's exactly what it did. Went back up to R3, and this time went all the way up to R4 and hit some resistance here. And now I know that there's a liquidity pool or some liquidity to grab. So I'm looking to see what happens. The new daily opens, and this time it opens below CPR, which is this black central pivot. And it comes back down, grabs liquidity, tests CPR again, and again, it goes all the way up to the top of R3 here. And so once it reaches R3, it's probably going to break down. If it's not an outside day setup, which is a really tight range, if it's a fairly wide range compared to the previous day, then it's probably going to break down. So you can see the cams are kind of backing up what happened with the fair value gap. And so this came back down, CPR, and then continued into the next day. So I just have these kind of labeled for you. There's S4, and again you can see we opened just above CPR, came down to S3, ranged, came down to S4, ranged a bit, came back up to CPR, and it started to make this upward wedgie thing. And this is something I wanted to talk about here. The new day opened on this cam range right in here. So we opened at the black CPR line, moved above it, almost made it to R3, and now it's coming back down towards S3. So I'm going to get rid of the cams. And let's just take a look at what's going on with this pattern. This is kind of, this is really interesting here. So on the 30-minute, sometimes I look at the 50 simple moving average. So above the average is going to be bullish, and below it is going to be bearish. So you can see we're retesting the 50 SMA right here. So there's a few things that could happen. This could be a rising wedge, which is bearish, and it could be breaking down here, or this could be a bear trap, and this could come back up and take off. Again, it is above the 50, so as of right now, you know, I'd be watching to see if it's going to bounce off this 50 SMA or not. If it does, then it's going to bear trap. It's going to come back. It's going to test this level, and I'm going to pull up this this book on Elliott waves here. So you can see this is a leading diagonal, is very common sort of triangle wedge pattern, and you can see it goes 1, 2, 3, 4, 5, and then it breaks down and it bear traps, and then it comes back up. Sometimes it retests that lower trend line. Sometimes it doesn't. Sometimes it just bear traps and takes off. I'm not saying that that's what this is. I'm just saying that this is one of the possibilities for what it could be. I would like to wait and see until we break, if we retest or break this line here. So let's see if there's any liquidity. Let's see if there's a fair value gap that we can look for. So going over here, and I can see on the 30-minute chart, there's a wick, there's a wick. Let's pull up a rectangle and just mark that. So those 3 candles, 1, 2, 3, lower wick, upper wick. That's how you find a fair value gap. And that tells me that there's liquidity in here that hasn't been hit yet. That's sell orders or limit orders, could be buy orders waiting for a lower price to get in. But we know that there's probably some orders in there. So if I extend this out, the idea being that this is going to act as a magnet. It's going to attract price to it, and price can do a few things. It can bounce off of it. It can dig into it and pick up liquidity, which is what it did here. And this is what gives me a suspicion that this may still have some room to go higher. It's digging in, they're buying liquidity here, and they're pushing the price up higher. They came back and got some more. They pushed the price up higher. Looking at the volume profile, we have a big volume bar here. This will be the flagpole of this start of this wedge, and then volume on a red candle, very strong sell volume. We have volume on a falling hammer here at resistance. That's pretty bearish. If you ignore the color of this blue falling hammer or pretend it's red, that's a pretty bearish candle. I would rate that as bearish. Another above average volume on this large red candle at support. Support broke. So I'm going to assume that at the very least, price is going to come back into this fair value gap. It's either going to test it or it's going to blow through it. But like I said, if this is a leading diagonal, then this could be a total fake out and price could come back up and jump. So if I was trading this, you know, I'd be waiting. The last thing you want to do is get involved with a correction pattern, and in this case an upward correction pattern, and say, oh, it's going up, it's bullish. Well, we don't know what this is going to do. I have a suspicion it may pick up liquidity and come back up. It may not. It may continue south. So this is a wait and see. Now, if this comes down and tests liquidity and comes back up and tests this line and it takes off, then I would know that this is a leading diagonal. And this can work, I believe, as wave 1 of an impulse. And that would be our signal to get in on the break above these previous resistant lines. Okay, guys, so I hope that helps fill in the gaps, fair value gaps, that is. And if you have any questions, DM me, hit me up in Discord, and I'll look for you guys in the chat and on Twitter. Hope you're having a great evening or morning, whatever it is in the UK, and I'll see you soon. Cheers.